Hello everyone and welcome to today's morning report on Friday the 4th of August with me, Richard Perry, market analyst at Hantec Markets. It is non-farm payrolls Friday, and what we do traditionally see on non-farm payrolls Friday is very little movement in markets ahead of the report, and that seems to be the case today. Equity markets basically flat, nothing really doing on equities. Also what we've got is, let me show you the board, little bit of dollar weakness, nothing too significant. Euros and sterling are stronger and the commodity currencies are all stronger. Yen mildly weaker, so you could argue perhaps that is a degree of risk appetite positivity. But generally speaking, what we have seen is the dollar under pressure, and that came again yesterday with this weaker than expected ISM non-manufacturing data. The dollar sold off after that, and also the pressure that is continuing to ramp up on Donald Trump's presidency with this investigation into the Russian involvement in the election, and that continues to sort of hamper the dollar in that regard. Now, what we're also seeing is Treasury yields fell away yesterday, little bit of a tick higher today. Nothing too doing really, and I can't imagine you're going to get too much direction ahead of the payrolls data. So that is where we are at. Now, in terms of payrolls, what we have got is an expectation of 183 on the headline. Unemployment dropping to 4.3. Average hourly earnings 0.3, and yeah, that's basically the expectations that Reuters gives. Now, let me show you the charts on that. 183 would be basically average, isn't it? On a 6-month average, basically 180 on payrolls. So that would be basically in line with that average. Unemployment just buzzing around 4.3, 4.4 in the last few months. So basically flattening off. Underemployment. This is the interesting one. If you start to see underemployment, the U6. Again, a second month in a row on U6 would be rising. Would be the first time that has been seen since 2012. So yeah, that could be a signal that sort of full employment is being reached. Now, the other key factor that the markets will be looking out for is the average hourly earnings. 0.3% expected there. That chart on the monthly doesn't really do a great deal. This is the one we need to look out for. The average hourly earnings on a year-on-year basis, 2.5%, 0.3% would be holding on to 2.5% year on year. So it needs to be 0.4% to tick the average hourly earnings up again on an year-on-year basis, and that is the one that the market is looking out for, because average hourly earnings needs to see wage growth in terms of the sort of labour market tightening. Needs to drive average hourly earnings or wage growth higher for the Fed to be confident that they are tightening at the right time. So that would be positive for the dollar today if that did tick higher. But yeah, the payrolls report today, I don't think you're going to get a great deal, to be honest. The expectations are pretty low in terms of getting a strong degree of wage growth, and I think there is unlikely to be too much doing, I think, on this payrolls report. But nonetheless, we are flat ahead of it. Now, on my chart today, which is silver, look at this chart here. Zoom out. Every time, 1, 2, 3. Okay, that was a longer one. But okay, the last two rallies of March and May lasted 5 weeks. 1, 2, 3, 4, 5. 1, 2, 3, 4 weeks in May. Again, we've had just over a 4-week rally, and it is just starting to break that trend channel. That is also coming at the resistance of this downtrend, and also a pivot at which sort of capped that rally high on 1690, around that 1690, and that is a level that has been sort of resistance this week. So that is interesting. This is a key crossroads moment, therefore, for silver. Breakout above 1690, that really does open the upside and continues the, puts you back into that trend channel, but more to the point, breaks that downtrend, breaks through the resistance, and I think could continue the market up towards the highs again of that June rally high, 1775. That would equate to gold pulling higher as well towards the June highs as well. But silver is a little bit less sort of bullish than gold is. But it's very interesting that we're seeing this sort of crossroads coming at the current time. Now, looking at the momentum indicators, they are consolidating. The RSI holding up above 50. MACD lines flattening off, arguably around neutral. Stochastics, yes, have gone below neutral. Gone below 80, but still, I think it's fairly positive until it gets a decisive sort of move lower. Now, this is the hourly chart where you see markets a little bit more neutrally configured. 60 seems to be limiting the RSI throughout this week. And again, that seems to be the case today. MACD lines just tailing off a touch. Stochastics as well tailing off a touch. So this is coming as the moving averages have broadly flattened off, haven't they? So this is a consolidation, and it could be a consolidation that turns into a correction. So 1690 is your key level that we need to watch out for on a break to the upside to really open up. And that would come on a weak payrolls report, more than likely today, if that were to be seen. So with that in mind, I wish you good luck in your trading today. You've got support on silver 1642 and then subsequently 1623. So I wish you good luck in your trading, and I'll speak to you later. Thank you.